Now, the Johannesburg Stock Exchange has started its final session for the week amid lower spot prices for Brent, crude oil and gold, while the rand is headed for its biggest weekly loss since the height of the COVID-19 pandemic in 2020. Global investor sentiment is waning amid uncertainty on economic recovery and global inflation. Joining me now to talk more on these and other market stories is Matete Thulare at Rand Merchant Bank. Matete, good morning. Good to have you with us. Let's look at the factors that are expected to impact the local and global markets today. I'm sure the war in the Ukraine is still one of those.
Good morning, Thabo. As you say, obviously we are facing a lot of factors. COVID, geopolitical tension, the uncertainty with central banks. All these things, they are bracing us for a lower open on the JSE this morning as international markets also take a turn for the worst. We've seen the likes of the S&P futures 100 points lower than where we closed. The Asian markets have also had a bit of a tough session this morning. Overnight, we saw the Nasdaq slip about 4% from earlier highs, on the back of soaring rates and obviously the tepid earnings that we've seen out in the U.S. market. So, I think the big aspect of last night was obviously Jerome Powell coming out, and I think he is signaling to the markets, prospecting one of the most aggressive Fed monetary tightening cycles in recent history. And that's also already sowing a lot of market discontent. Already Mr. Powell signaling the fact that there could be 3, 50 basis point hikes on the cards in the next few months. And they are actually favoring the idea of front loading those moves. So he said that, this is something that they're going to be tabling at the next meeting. Last night was his last public appearance before we see him again on May the 4th, which is obviously when the Federal Reserve will be announcing their next, interest rate hike decision. And the market is already factoring in 150 basis points worth of hikes over the next couple of months. So, all on the back of the fact that inflation is running roughly 3 times higher than the Fed's 2% target. And it's going to be appropriate for them to move a little bit more quickly. And I think this is also going to play into the hands of the Reserve Bank locally with Lesotho, obviously, looking at what happens with regards to the Fed. So it is going to be quite interesting because the market this morning is really bracing itself, and that's why we've seen even the rand a bit weaker.
Yeah, indeed, rand pummeled there. In fact, South Africa facing a number of headwinds on all fronts. Of course, as you've already mentioned, you've got the hawkish Fed, you've got the floods, you've got COVID. How's this going to impact on the oil price? Seeing the rand is the worst performing, I suppose, this week. Currency dropping 5% this week, worst amongst its peers.
Yeah, look, it's been a cocktail of issues, and that's why we've seen ourselves now touching the 1560 mark. I suppose it's the aftermath of the catastrophic floods that has disrupted the likes of transport and also the rail networks that we've seen out in Durban. There is the signs of the resurgence of the pandemic. Numbers with regards to COVID cases are also rising. We've even seen the rolling power cuts that are obviously undermining the economy. Just the flood damage, which is estimated to cost about 10 billion rand. That's also affected operations of a lot of companies, including the likes of papermaker Sappi, and it's caused a lot of major damage to the rail infrastructure, providing access to the Durban port, which is South Africa's largest export terminal. If you think about it this way, Thabo, at the recent, budget statement in February, Minister Godongwana highlighted that the fact that the high commodity prices actually boosted the tax revenue base. And obviously, if we're not able to get exports out, and obviously with the miners also struggling, that could also hamper us locally. But also, the threat of another COVID wave infections could hurt South Africa's public finances as government is really struggling to curb debt. The local problems come at a time when, we are facing the hawkish Fed and obviously what's happening from a geopolitical tension in Eastern Europe. So obviously the rand is struggling. We are the biggest loser amongst our emerging market peers. We are down 5% this week, and it's actually on track for the worst weekly performance since the start of the pandemic in 2020.
Right, let's look further afield now. AB InBev looked to pull out of Russia, possibly taking a hit there of $1.1 billion.
So look, I mean, Russia is the world's fifth largest country in terms of overall beer drinking. So, this is one of the major few markets around the world where beer consumption actually rose during the pandemic hit year of 2020. The numbers actually even grew a further 3.3% during 2021. So this is why it's the, decisions, the likes of Carlsberg, Heineken, now also AB InBev to pull out of Russia is very difficult. I mean, already AB InBev, we do know that that's the world's largest brewer. They'll be selling their non-controlling interest in their Russian JV as they actually exit operations in the country following the invasion of the Ukrainian country. And obviously at this point in time, this comes at a point where now they're going to halt the operations in Russia, and also even the likes of Carlsberg. I mean, they're already cut to their earnings guidance and said they're facing about a $1.4 billion write-down also as they exit Russia, whilst the likes of Heineken came out in March to say that they're also selling their businesses. So, it's quite interesting that, for a country that is quite a huge consumer of the beverage, that, some of the guys are actually already starting to pull back. So the request to suspend the license for production and also the sale of some of the Bud brand in Russia as part of the AB InBev deal is also on the cards. So it is going to be quite interesting to see how that plays itself out, especially given the fact that Russia also contributes significantly to the AB InBev balance sheet when they report their numbers.
Now, of course, while the poor of us are still complaining about petrol, the wealthy are making moves. Billionaire Elon Musk, he already owns the X.com domain. He's now put together a holding company, which many are believing this could be the parent company for Tesla and SpaceX. What's the logistics here?
So Elon Musk, I mean, obviously South African-born Pretoria boy, he's now formed a trio of holding companies as part of his bid to actually acquire Twitter. And I think this is potentially going to give him a path to bring all of his business ventures under one single parent. I mean, already him and his investing partners are planning to put money into one of their entities to fund the purchase of Twitter. And also, a subsidiary would also merge with the social media firm. It's not clear at this point in time if all the holding companies would have any affiliation with some of the current businesses that Mr. Musk has, including the likes of Tesla and also space exploration technologies. But to combine his companies under one parent entity, obviously, Elon Musk would have to follow the same footsteps that the likes of Google, which restructured itself in 2015 to create the new holding company called the Alphabet Inc. That would also be something that he would need to do. But as he said, I mean, in one of his interviews just over the past couple of days, it's not going to be an easy feat, but obviously it just shows you the type of thinking and obviously what we need to expect from Elon Musk over the next couple of months.